Welcome back to The Real Deal with Empire. As always, I'm your host, Ali Fawaz. And as I usually tell you guys, this is the show where we don't just talk about transactions, it's about transformation. And today's episode is really about that transformation, especially if you're interested in real estate, specifically if you've considered getting into the investment side of real estate. In particular, I know that maybe many people have been watching TikTok videos and inspired by what they see in TikTok and feel like they can make that leap onto investment side, which I want to encourage anybody to get into real estate, but I also want to encourage you to do it the right way. And so that's why today's topic is pretty important. A few weeks back, we had Jeff Barry with Milestone Mortgage on the show. Today, we have a little bit of a different spin, a little bit of a different take on it. We're going to focus on the investor side. And my guest today, who is a expert professional on this topic, Ramy, who is with Olympian Mortgage, is joining me today to shed some light and give us some insight into the space, which he's been doing some phenomenal things. You may have seen him on social media. His presence is out there. Love what he's doing. In fact, the growth that I've seen from Olympian Mortgage has been tremendous, and really want to, I guess, pick his brain a little bit here today. And we're glad to have him on the show. Ramy?
Thanks.
Thank you for joining us.
Thanks for having me.
Yeah.
Long-time listener, first-time caller. I've been following the episodes and just wanted to say thank you for allowing me to bring the expertise and the years of knowledge that I've had. The pleasure of having in the business to the table. So looking forward to it.
Well, thank you. I appreciate you. So let's, I guess, dive in, if you don't mind. So you're not a real estate investor yourself.
Nope.
But you do work with a lot of investors.
Absolutely.
And so on. And I'd love to know, how did you get into that particular space?
So, when I did start my mortgage journey in 2015, the avid investor has always been something that I've kept a close eye on, just simply because, there's a lot of benefits that come out of real estate investments. A lot of folks that have made their wealth over the years at some point started with some sort of real estate investment. Yeah. And so that's why it's always been, a liking of mine, a passion of mine to not only originate and close loans with folks that are purchasing primary home residences and whatnot, but also keeping a close eye on folks that are in the investment game. And so in the last 12 months, the team and I have ultimately put an ultra focus on those folks as, in this real estate market that we're in. As we all know, post-COVID, it's a unicorn. And so we don't know what rates are going to do. We don't know what the investments are going to do. And a lot of folks that I've been working with want to get on that bandwagon of wanting to build their net worth through real estate. And so I've just focused on it, taken the process, refined it, and we've been seeing a lot of success with it. So
love that. And we're going to dive into all of these things. Investors have a very different approach to financing, obviously.
Of course.
And I'd love to hear from you. What are some of the lending strategies that perhaps you would advise or that you work with investors, as opposed to what the strategy might be for a typical residential client of yours?
Absolutely. And so anytime in which an investor is going to, quote unquote, invest in a new property, well, it starts and stops with the mortgage. If the mortgage makes financial sense and there is a room for profit margin, then that investor is most likely going to take on that deal. And so what I help do and what I've streamlined, and the one thing that's worked for me is to take the underwriting portion of the mortgage, breaking it down in a simple term and in a simple way for the avid investor, and presenting it to them to where it makes financial sense for them, makes financial sense for me, and then obviously makes financial sense for the real estate agent involved to be able to go out and not only just to close on a mortgage, but to be able to find the right tenant, to be able to go out and seek what the rent schedules in that neighborhood are, right? Yeah. How much money are we going to produce and bring out of this property? What's historically been the appreciation values in that neighborhood over the last 5-10 years? And so it's a combination of those items in addition to having a very streamlined product and a very streamlined process with myself and my team. The last thing an investor wants to do, as we're all busy in a very, very demanding real estate, and let alone in the world, right? In the real world. Yeah. What the team and I have done have simplified it to the point where we talk to the client maybe 2 or 3 times up front, get the loan into process, and then set, 10 to 12 days later, we have it clear to close. And so with the combination of the ease of process, with the combination of understanding markets, and then the combination of providing great pricing to the investor, that has allowed us to take, that business and that aspect of the business to the next level.
So it sounds like you're really more than just the lender. You are advising, consulting, 100%. And so you're actually helping them to make sure, do the numbers actually make sense 100%. For them as an investor?
100%. Yep. And so
you're also part-time therapist.
But yeah, part-time therapist, a counselor, but it's a blessing to be able to have that opportunity. And so, you get to a point in your career where you've earned the right to be able to provide that value and to provide that advice. Yeah. And luckily, I've been able to, earn my stripes, so to speak, over the last 10 years or so in the business. And and I'm very passionate about what I do. Like, I'm very thorough. I lay the law of the land as far as what to expect, worst case, best case scenario. Yeah. And ultimately, in any type of transaction, whether it's your marriage, whether it's, your counselor, whether it's your attorney, the most important thing is to communicate that information to the client eloquently and easily for the client to understand. Yeah. And being able to have that skill and have that ability to do so has also helped me tremendously in being able to scale and to bring that number up as far as investors on a month-to-month basis.
Nice. That's amazing. Yeah. What about mistakes? We know that, first-time investors probably are going to make mistakes.
100%.
What are the most common mistakes, or maybe the most common mistake you might see from a first-time investor?
I love this. And this is where, first-time home buyers and first-time investors they're like the little brothers and little sisters that I get to, advise and to lead into battle and whatnot. And so a couple things that I see early on investors do or not do is very simple. Number one, you have to have a belief system that you will and want to get into real estate as an investor. Mm-hmm. Okay? Let me rephrase that. Let me repeat that. You have to believe that you're going to be successful, going into this journey. That's the number one thing. You have to believe.
So you can't be afraid.
Can't be afraid. Okay? That's the number one thing. The number two thing that I see that early investors do or mistaken or kind of fall short on is not having the right team in your corner. Mm-hmm. Whether it's title, whether it's insurance, whether it's a contractor, whether it's a real estate agent, whether it's even a lender. I've seen it more, so. And now, 7-8 months into this process, into this new, target audience that we're going after, I've even seen disasters come my way as far as lending, to where it's like I had the wrong person on my team, unfortunately. And I've had to basically pick up where another person had left off and try to mitigate and try to fix, and so on and so forth. So number one is belief system. Number two, it's having the right team in your corner, right? And then number three, which I think coincides with the first two, is having patience getting into the investment world, right? Mm-hmm. In a what's in it for me now type world that we live in, right, or the need for instant satisfaction. I think needing and having patience getting into the real estate investing world is key and crucial to being able to, execute and get the greatest return on investment 5-10 years down the line, as, investments and, return may not be as quick as we want to in today's world.
Yeah, so. I think that having the ability to have a long-term vision 100%. Is critical. It's kind of going back to everybody wants that instant gratification. Yep. Well, sure, it'd be nice to be able to have that. You're not going to get it on every single deal.
Absolutely not.
But if you have the forward-thinking ability to see what the future holds, yep, and to see that the opportunity lies in the future, having that vision for the future.
100%. And that coincides and falls back on having the belief system, not being afraid, being in a scenario to where you have the right set of team, the right of folks in your corner to be able to bring that dream to life, and then ultimately being patient along the way. Sabr. You have to have sabr.
Yes. I like that.
Yeah.
So most people, shifting gears a little bit into self-employed borrowers, right? Like we want to crack the code on that and how we can help them. So a self-employed investor has a different set of criteria and rules that are probably applied to them when they're borrowing.
100%.
What are some of the challenges that lie there, or what do they need to be prepared for in that case?
Yep. And you're absolutely right. A W-2 employee, as far as income goes, is way different than a self-employed borrower. As far as income guidelines go, there's different set of qualifications, for both. One's instant, one's you have to have a history. And a lot of it stems from the liability and what the lender is willing to take on and not take on. And so over the years, all of us as loan officers in this industry, or even being as self-employed, we've all struggled with what our taxes show at the end of the year, right? And it goes without being said, we all have successful businesses. We all get into the entrepreneurship of being self-employed to be able to earn more, to have the flexibility, and to put your touch on things. But a lot of times, Uncle Sam at the end of the year wants to take a lot of that money, right? Or in order to scale and build that business, it requires a lot more input rather than output as far as gaining that money. And so lenders have gotten smart over the years and saw an opportunity here in which they've brought out what's called the bank statement loan. Okay. And this bank statement loan basically is an opportunity for self-employed folks to be able to earn credit with the lender for income through what's deposited into the bank statements versus what the client's obligated to show at the end of the year on their tax returns.
Okay. And when we're in this case, we're talking about what's being put into the bank statements into the business bank account.
Into the business bank account. Exactly. What's being put into the business bank account. And so if you have a business that's been open for X amount of years and the business is profitable and generates lots of revenue, right? Well, the lender took a look at that and said, hey, there's an opportunity here. Let's go ahead and give credit to that self-employed borrower, right, with other stipulations and guidelines to secure that liability. Give them credit for what the business brings in from a revenue standpoint versus what they are obligated to show and write off at the end of the year, which is a lot of times a little bit less. They may put them out of qualifying and not being able to purchase a home, whether it's investment, whether it's a second home, whether it's a primary residence.
Is there a drawback to this particular program?
So the drawback, I don't like to use the word drawback, but I think the compensating factors to be able to use that income is basically a higher down payment, slightly higher down payment up front, and then the interest rates are going to be a little bit higher as far as what a regular conventional loan is or FHA loan will be. So the two drawbacks or the two setbacks or the two compensating factors that the lender uses in place to be able to use that income is basically just a higher down payment up front and then a slightly higher interest rate, which we can work around and get a lower rate to be a little bit more competitive on my end. So that's pretty much it.
Tell the folks what's the name of that.
So this is considered as a bank statement loan. Very simple. Bank statement loan.
Got it.
Yeah.
So I've seen the growth from Olympian Mortgage.
Yes.
Myself. And I think you've got a billboard now that says that you're hiring. So
absolutely,
obviously you're growing. I guess what's been the biggest driver of your growth at Olympia?
That's a great question. And this is something that, going into this journey, going into this project, I really wanted to focus on because the success and what you're looking to achieve, and for a very long time, I thought I could do it by myself, right? That was one of the mistakes that I did. And one of the mistakes that I learned from was thinking I can do it by myself. And so if you take a look at any successful franchise team, the Patriots, the Chicago Bulls, whatever it is. It takes a team and a village to be able to go out and achieve greatness. And so going into this project and going into Olympian Mortgage, when I had joined them, I wanted to put together the perfect facility, perfect, opportunity and platform to bring in good talent for them to be able to go out and perform. So we focused on lead flow. We focused on marketing. We focused heavily on the facility itself. We focused very heavily on compensation, which I think is a big one, right? And then obviously guidance and leadership from my team and my partners and I. And the combination of those items ultimately put forth, for the banker by the banker. The establishment and the processes were built for the loan officer, for them to be able to come in and perform and be successful. Yeah. And so once we implemented that, then we focused on going out and getting good talent and good folks to come in, and we plugged and play, and those folks were able to come in and be successful on day one.
Nice.
Yep.
I love that. So obviously building a great team is key to any business.
Very,
right?
Yep.
And when you're recruiting for Olympian Mortgage, I guess, what do you look for in particular in a loan officer?
These are the secrets that we may not be able to give, but we focus on, number one, I think it's tenure, right? The number of years in the business. And so, ultimately it's important to have, to be licensed. That's first and foremost, right? Yeah. To have some sort of background in being able to originate, right? Having a known product development or product knowledge coming into it. That's first and foremost. I look for the hard worker. And I'm not, and when I say a hard worker, it doesn't necessarily mean more hours, right? It's just doing the maximum effort within the amount of time needed in order to be successful. Mm-hmm. So if that's the 9 to 5, then I look for the folks that are going to come in from 9 to 5. Yeah. Number one, with the positive mindset, okay, I think, which is the most important thing. And number two, having a goal and being able to achieve that goal, right? Because anybody can say that, hey, I want to be successful. That's easy. But my version of success may be a lot different than what your version of success is.
Right.
And so up front, I want to know what success is to that person. Mm-hmm. So having the product knowledge, having the tenure, having the ability to come in and do 100% effort within the time, from 9 to 5 or whatever that time is, right? Work until, you get the job done mindset. And then number 3, I truly want to learn what the 5 and 10-year goal for that person is. And then based off of that, believe it or not, I assess whether or not this person is a good fit for our team or not, right?
Yep.
And I may be able to help and shed light on increasing that goal. I may be able to help and shed light and making it part of my goal. And so, having that open dialogue ultimately, hones in on who we want to bring in and what type of talent we want to bring in.
So what typically separates the average loan officer from the top producers?
The mind.
Okay.
The mind. And what I mean by that is you have to have a winning mindset, right? You have to have a winning attitude. You have to have a positive attitude, right? And so a lot of what we do is very mental. It's not physical. I can sit in a desk for 10 hours a day. It's not very physical. Mm-hmm. But when I go home at the end of the day, I'm mentally exhausted.
Yeah.
And so what separates good from great is whoever can overcome their mind, right? Whoever can overcome and be grateful on a day-to-day basis. And then whoever can overcome and strive for greatness in their mind between the 2 ears will ultimately separate them from what's good and what's great.
I love that. And really, that's something that probably resonates across
every
industries. Yeah, exactly. Exactly. It is all about mindset and attitude.
100%. And I've grown over the years to, this may sound a little aggressive, but I've weaponized my mind to be this lethal weapon, right?
Okay, we got WMDs.
Yeah, a bunch of WMDs inside my head to be able to, I may not have all the capital in the world. I may not have all the knowledge. I may not have all the good looks and charms, unless, other people may think otherwise. But I've learned, and I'm still learning to be able to control my mind and focus on the things that I can control in order to achieve success and greatness and so on and so forth. So
nice. I like it.
Yeah.
So there's no shortage of mortgage companies that are out there.
Very true.
How do you see the competition, and what does Olympian Mortgage do differently from that competition?
A great question. Competition is great. I encourage competition. I love competition. I think without competition, the great teams that are out there, again, the New England Patriots and the Chicago Bulls and, the Red Wings and the Pistons of the world would have not achieved success without having that fierce competition. And so we learn from our competition. We learn and grow, and we go into every transaction, into every conversation to where we put the client first. And so with the combination of competition and the combination of truly understanding what a lending transaction consists of, or what I should say, a real estate transaction consists of, allows us to be successful and what separates us from the next person over. Let me elaborate on that. So in a real estate transaction, you may be in your bubble and you may maybe talk to two people, the real estate agent and the client.
Yeah.
But if you really take a look at who's involved in a real estate transaction from a 30,000 foot view, there's a lender, sometimes two loan officers, two real estate agents, sometimes two title companies, right? And then in addition to all those professionals, their families are also involved.
Absolutely.
Okay?
This is an emotional decision that's being made.
Big emotional decision, right? Whether it's on the refinance side or whether it's on the purchase side, more so on the purchase side. And so the drum that I beat every single day to my guys and gals is whenever in which you are transacting with a client, whether it's calling them to give them good or bad news, understand who's at the helm, what's behind the scenes that you don't see. And if you always keep those people that I just named off at top of mind, you will never fail. Because your articulation comes out smoother and with care.
Yeah.
Your delivery is a lot smoother and is delivered with a level of care, level of kindness, right? And so whether you have to deliver good or bad news, if you approach the transaction as humans on the other end, you can't fail. In any industry, you won't be able to fail.
Mm-hmm.
And so couple that with facility, compensation, lead flow, marketing, all that good stuff. You put this, nucleus together, and you can go out and achieve greatness. So
I like that.
Yeah.
There was a question I wanted to ask you earlier, and I think I forgot, but I want to throw this one back out there. Let's bring it back to the investors, right? You've seen the industry change over time, and there's ebbs and flows. I'm curious to know, what have you seen in terms of the investor side? Have you seen an uptick? Has there been growth there? Do you have any data around that that says, here's the story that you're seeing from your office?
So I don't have any specific data, but what I can speak to is the amount of investors that are knocking on our door and calling our phones each month versus the amount of primary home, regular everyday consumer and looking to purchase a new home, first-time home buyers, such thing. And so in the last 12 months, the most consistent phone calls and transactions that we've done have been the investor transaction, right?
Yep.
And so for every 3 investor phone calls or every 3 investor deals that we couple it with 1 consumer every day want to purchase a primary home to live in type thing. And so I personally think that that's what's ultimately kept the lights on. That's what's still hot in this type of real estate market. And there's truly been, as Olympian Mortgage has truly focused on this and streamlined this process for investors, I think our number from a percentage standpoint has increased about 25 to 30% from where we were last year as far as the investor standpoint. Yep.
Yeah.
Yep. And so it was a 1-to-1 ratio about 12 months ago. And then now we're about a 3-to-1 ratio as far as what we have in the pipeline.
Yeah.
Yeah.
And at least from my understanding, what I've seen in the marketplace, In fact, Michigan itself is a pretty good hub for investors still.
Yep.
In fact, there is real estate agents who are moving up to Michigan from other states like Florida, for example,
100%.
because they see the investor opportunity up here.
Yep.
There's still margin to be made on
100%.
property, whereas I think a lot of the country has gotten to a point where they've kind of reached that tipping point, and the margins just aren't there if you're an
100%.
investor. Whereas in Michigan, our market's still pretty ripe.
Huge opportunity, huge upside in the Detroit market. I don't know if you're going to believe this, but I'm going to say it anyway. The last 5 deals that I've closed as an investor, from an investor standpoint, as far as loans on my end, 1 lives in Saudi Arabia, 2 live in Virginia, 1 lives in Florida, and the last one that I just closed lives in California. So these are folks that are real life people that are all over the U.S. and outside the U.S. that have hired Michigan agents, right, through referrals or through people that they know, and they're investing their hard-earned money in the Detroit market because there's such an upside swing. And so last year I was right as far as that, and then once I saw that there was an opportunity, in the month of March I had a gentleman in Saudi Arabia, him and his wife, my house, and he's on his second one now. He's out looking. His agent is out looking for the second one. I have 2 different set of folks from the Virginia area, right, that are purchasing as well. Yep. 1 in Florida, right, used to live in Michigan, that has retired in Florida, has a little bit of cash flow, wants to redump it into real estate, and then California, right. I've stayed up many nights in the last 30 days, just accompanying the time difference between California and Michigan, right, and still being able to provide value and closing in a timely fashion, and those folks being able to earn that opportunity to add out to their wealth each and every month. So
I just had a first-time investor do a closing on Friday, and she's from California.
Yeah, see, there it is.
And so I think when we're seeing these out-of-state investors picking up on what the market looks like here, really, if you're in Michigan and you've considered investing, these are signs that tells you should be investing in the market here right now. Take advantage while you can, while the margins are still looking good.
100%. That's a true statement.
Yeah. So let's talk a little bit about leveraging debt.
That's a good one.
So there's always a debate in real estate, right? When should an investor use financing to grow their business and grow their portfolio versus paying down that debt, right? That's a common theme. What's your take on this?
I personally, and this is a biased statement, but I'm in the business of lending money. And so if we can leverage somebody else's money for a gain for you, then 10 times out of 10, I'm going to say leverage somebody else's money to be able to build your wealth and your net worth. The only time in which I say leverage cash and assets versus leveraging debt to grow your net worth is if you're in a competitive situation to where the cash supersedes the financing, then I would say go and dump your cash into that property, earn the right to be able to purchase it, put it under your belt, and then go out and re-leverage the money on that property to get it back and to reuse it in a different sense. Yeah. And so I have, and this reminds me of one specific investor. And so he doubled his purchasing power and his ability to take on more real estate properties by just leveraging the bank's money versus leveraging his. And so he went from, and he's a flipper, so he flips houses. Okay. And so he takes on a project, buys it cash, dumps money into it, resells it, after market value, whatever, or after renovation value. Right. And so he was doing 2 or 3 at a time. Now he's doing 6, 7 at a time because he's leveraging the bank's money. And so if I can take on that project with you, or my team can, right, be able to streamline it for you, still do it in a streamlined process, and you triple and double, quadruple your money, your cash flow, then why not?
I think streamlining is key there because one of the big incentives for why you would go the cash route is
It's a streamline.
it's a streamline. How
Yep.
fast can you
Yep.
get to closing? How
Yep.
fast can you close this deal? Because it's a numbers game.
Yep.
How many can I complete in a month?
Exactly.
And so I think that's one of the biggest draws to the cash side of it. But I think what you're talking about carries weight. What do you think is the possibilities in terms of how fast can you close?
I think that's a great point. I was
Yeah.
just about to bring it up. Any time in which we are pre-approving, putting in an offer, and so on and so forth, I always tell my real estate partners, allow me to be heavily involved in that conversation. And here's why. The difference between 30-day close and a 14-day close could mean the difference of you getting that offer accepted or not. And so us going into the transaction, we already know what the credit scores are. We already know how much the down payment is. We already know what the income looks like. It's all been tried and true and verified on our end.
Yeah.
And so going into the transaction, all we're truly missing is insurance, appraisal, and title work.
Yep.
And everything else has been verified and true and given. We've gotten 2 thumbs up from the underwriter already. And so we always tell our real estate partners, whether on the listing side or whether on the buyer side, we say, hey, this is just as good as cash. Right? Because on a cash transaction, you have to wait for title work. You have to wait for appraisal, not so much appraisal, but more title work. And so we leverage our need for speed, right? We leverage it in winning transactions and getting offers accepted because we can turn around a deal in 14 business days or less. And I'm putting it out there, right?
You heard it here.
We're putting it out there, right? Listen, in a perfect world, we strive to be great,
Yeah.
but we may have the occasional hiccup along the way, but 14 business days is what we strive to be able to close transactions.
Okay. I like that.
Putting it out there.
Yeah. With a smile on his face, too. All right. So I want to transition because I want to go into our segment, what is called Real or Ridiculous.
Ooh.
So this is the part of the show where I'm going to ask you a series of questions, and you're just going to tell me if that's a real scenario or that's just ridiculous.
Fair enough.
Simple as that?
I'm ready.
All right, great.
This is my long-time listener, first-time caller opportunity. This is what I was waiting. And in the last 10 shows that have aired, this is what I look forward to. So
Don't disappoint. All right, so first question. You need 20% down to buy a house.
ridiculous.
I like that. That's quick and easy.
Yeah.
Second one. If you're self-employed, getting a mortgage is nearly impossible.
Ridiculous.
And I think we talked about
Yeah.
the reasons here.
Yeah, we'll make it real for you.
Third question. You can get a 30-year fixed rate loan for investment properties just like a regular home.
Real.
Really?
Real. Yes.
Okay.
Very real.
Okay.
Yeah.
You heard it here. And then final question.
Yes.
I think this is a pretty good one.
All right.
Hard money loans are only for desperate investors. Now, you may have a bias on this.
Ridiculous.
Yeah.
They're not for desperate investors. Maybe 5 years ago, possibly. But, lending institutions are for profit.
Yeah.
And they got to keep their lights on. They got bills to pay. They have, teammates and stuff and payroll and so on and so forth. So just like any business, they're for profit. And so they've gotten smart over the years and really honed in on the bank statement loan and what's called the investor loan.
Yeah.
To be able to allow for investors to go out and invest and create a big portfolio without having to go down the route of the hard money. I'm going to leave it at that.
Okay. No, I like it. And I had to throw that one in there.
Yes.
Because we had to keep you on your toes.
100%,
Keep our audience
yeah.
even on our toes. Okay, so what's next for Ramy for Olympian Mortgage, right? What's on the horizon? What big moves and what big goals do you have in the next year?
That's a great point. And, I think collaborating, I think sharing ideas, I think sharing goals is a big piece to success. And so for us, really, I've really in the last, quarter, we're the first quarter of 2025, so we're in the second quarter now,
Okay.
is really and truly focusing on the community. I truly believe that there's so much business out there within our community, and not just the Dearborn Heights. I'm talking about Tri-County, Southwest, Southeast Michigan, and throughout the state of Michigan, that there's so much business and so much opportunity out there that for me and my team and I, we really want to go out and focus on capturing market share within the community, within school districts and CPAs and lawyers and real estate offices and financial advisors and teachers and the everyday consumer, allowing them and building a platform for folks to come knock on our door and for us to ultimately be the obvious choice when it comes down to home loan lending. And so we coupled that with all the items that we spoke of. And I truly think that the team that we have and the team that we're going to grow in the next 9 months from now to the end of the year will truly be a pivotal part in being able to grow a community presence and to ultimately allow folks to have a place to come in comfortably to talk about their finances and to talk about probably the most single important purchase of their life, which is their home, which memories are made, babies are born, divorces, marriages, things of that nature. And I look at it from a blessing standpoint. So for what's to come, it's very exciting. I tell the folks that are home, keep a lookout, come knock on our door. We have a beautiful office in downtown Dearborn that's open to everybody in the community. So we'd love to be a part of everybody's journey moving forward.
I like that. I'm looking forward to seeing the growth and the success and that continuation for sure.
Slowly but surely, it'll come.
Yeah. Well, Ramy, this has definitely been a masterclass in financing and the success mindset. But before we wrap up, where can people find you?
Yep. So the easiest way from point A to point B is on this little cellular device that we have. But our office is located right on Michigan and Military, downtown West Dearborn. My direct phone number is 313-903-5548. And then you can find us on almost any social media platform, whether it's Instagram, Facebook, soon to be Twitter, LinkedIn, and TikTok. So any of those avenues, you can search us on Google, right? Or you may ask your neighbor because they probably purchased a home with us or refinanced with us. And so, ask around and you'll definitely find, so we're easily accessible. So if you're looking to purchase or refinance here in the future, allow us to be part of your journey. We'd love to help you with that. So thank you.
Awesome. I love that. And to our listeners, if you found value in this episode, please do me a favor, subscribe to the podcast. I need you guys to click the subscribe button because once you do, you can get a ding every time we release a new episode. So it'll remind you, that way you won't forget. So please subscribe, leave a review on the podcast, and then share it with your friends. So we want to grow our base, obviously. So you can catch us on Spotify, on YouTube, and on Apple Podcasts. And so we want you to continue listening. And until next time, keep doing what you're doing and consider investing if you haven't already. Thank you, guys.